Well, hello everyone. Welcome to Live Trading Thursday. My name is David Verbruggen. I've been gone for a couple weeks, but I'm happy to be back with you here now. Some good things happening in the market, getting a much needed pullback. That could set us up for some opportunities in the future. So guys, you know how this works. It's your time to get your tickers in, get the stocks in that you want to take a look at. Any trades that you have that you want to look at, that would be great as well. In fact, when you send in those trades, I want to challenge you. Send in some information as well. Instead of sending in just a ticker of like Apple, send, okay, well, what type of trade are you looking at with Apple? Are you looking at maybe a bear call trade? Are you looking at a straight put or a straight call? What is the strategy that you're looking at? The more detail you can give me, the better analysis that I can give you. So that's kind of my challenge to you today. Guys, keep in mind that all the examples that we're going to be looking at in this live trading session should be viewed for educational purposes only and not taken as trading or investment advice. All right, guys, I'm going to share my screen here. Like I said, the market's been doing some good things. It really has. I mean, yeah, the last couple of weeks it's been going down a little bit, but we kind of needed that because this got pretty hot, right? The overall market, I mean, this was a 10-day EMA bounce here. 20 days okay here, but some pullback is nice, right? Now, nothing to really get worried about yet. Yeah, we don't love necessarily that. Had a nice move up today, and then it pulled back quite a bit. But still have the 50-day moving average just below here. That could act as a potential support like it did back here once, twice, right there, and 3 times. Now, it's been a while, but we've also been pretty extended for a while now. So it hasn't really gotten close to that 50-day again. So, the question is kind of, well, where are we going, right? Are we going to keep moving down? We could move down, bounce up off this 50. We could pull back further, right? We could pull back further, and maybe this line needs to be pulled out, and we'll have to see if that comes into play, or maybe one of these horizontal lines. Big picture, and I'm not really in the business of predicting what the market's going to do, but I will sometimes say things like, I wouldn't be surprised if, and so this is one of those cases, right, where, okay, let's zoom way out here. We're looking at a 3-year weekly. You see this 2022 bear market, and then we have recovered most of that distance, right? Most of that we have recovered. So I wouldn't be surprised if we do end up retesting the highs around 4,800 sometime in the next couple months or so, right? That would not surprise me. I'm not saying that has to happen or that will happen, but it kind of makes sense, right? It would make sense. And then after that, I will also, again, would not be surprised if the market does actually move down pretty significantly. There are still warning signs in the market, guys. There's still warning signs in the overall economy showing that, hey, things aren't necessarily as pretty as what we would want them to be. And so this move right here, this bullish move up, has got some people a little confused as to why is it doing that? Should it be doing that? Nonetheless, it's doing that. So therefore, as short-term traders, we need to get on board, right? So what are we going to be looking for, right? And go ahead and put in your tickers and the stocks that you want to look at in the comment box. But what are we going to be looking for? We're going to be looking for primarily pretty patterns. Now, there's bullish charts out there that are pretty. Some of them may have already failed. I know Apple was a gorgeous chart up until about a week or so ago, right? Actually, let's take a look at that one just because I mentioned it here. So there we go, Apple. And I've got too many lines on here, guys, because I was teaching line drawing and all that. So I've got a ton of lines. Let me see if I can just hide that real quick. There we go. You can see how pretty this pattern was. Just the bounces off the 20-day, just beautiful. And then we did some bounces off the 10-day, another 20-day bounce, 10-day. And then, one closed below the 20-day, and the next day there was earnings was a catalyst of that as well. Even though earnings was okay, it did drop quite a bit. So that happened, right? It just happened. That was little over a week ago. So pretty big move down. So there are some bullish patterns that are breaking down, but there's also some bullish patterns that are still looking pretty good. So those are the ones that we may want to go ahead and find. Now, while we're waiting for some tickers to get in, let's just do this, right? Let's just go find some. What are some of the ways? Actually, there's many different ways we can use Charts by Tradeway to find what might be a good pattern. But one of the things I like to do, especially when I haven't necessarily been in tune with the market for a couple weeks, because I was out of the country for a couple weeks here, coming back, what do we do, right? I like to come to the home page, click on market, and I'm going to be looking at this sector chart. Now, today you can see what it's been doing. Okay, media is up 1%. Everything is fairly flat. Nothing too much is really happening, right? That's today. But what about in the last month? What's been happening in the last month? Okay, things are still up for the most part. If we go to the last week, you're going to see that it's down. Technology is down quite a bit, and technology is a big one that can pull the market, right? But then media is still up, and energy is still up. So we've seen multiple times now that media is up. So going from there, we could go into the heat map and take a look at media. What is it? What in media? Let me just reset the filters in case. There we go. What in media is going up? What is driving that here? Okay, we got Goog and Google. A few others that are looking pretty good. Let's just take a look at Google, see what's going on. All right, Google still doing okay. A bit sideways in the last week or so, but the chart is holding up pretty well, right? I mean, it's moved down slightly today and is sitting on the 5-day EMA. Still pretty hot, right? Still pretty hot. So I'm not going to go through all the ones that heat map was showing, but I wanted to show you guys what is a way that I may use as a process to go find some charts that might be moving up or moving down, if that's what I'm looking for, right? All right, perfect. Brian's got some he wants to look at. Seems like a lot of stocks are breaking up trends as Apple. Okay, yeah, we were just talking about that. You're right. Apple moved down quite a bit there. And you're going to see that a lot of the energy stocks move down quite a bit there as well, right? Ruben wants to look at DNA. Let's take a look at DNA, see what we can find. I'm not familiar with this one, frankly. And I can see, okay, it's a very low dollar stock, right? So when we're seeing that it's, less than $2 a share, I'm not even going to consider options, right? Yeah, there's enough leverage built into just the stock itself. Now, many people won't even trade this because it's so cheap, right? Some people are like, I'm not going to trade anything below $5 a share. I don't know if I would call this a penny stock yet. It's still worth more than $1, but what's one of the big things that we need to ask ourselves? What is the pattern? What is the pattern, right? And we could draw a line on here, and that line is going to be pretty close, actually. 1, 2, 3, 4 touches. And those are some nice moves off the 50-day EMA. But then it failed this last time around. Earnings here, earnings, they lost money. You can see that there. Lost 9 cents per share. Moving down quite a bit after earnings. So this uptrending pattern is failing. So what about it? Well, not much to do with it right now. We needed to reestablish a pattern. Yep. All right, Benjamin, I see you there looking at SH, PSQ, ADP, and MRO. Let's take a look at those. Now, I know several of these guys are going to be bearish, right? Or I should say they are inverse ETFs. SH being one of them, ProShares short. So this is the short of the S&P 500. Now, last few months, S&P's been going up, so therefore the inverse ETF of the S&P is going to show that it's been going down, right? And in the last couple of weeks, S&P has been going down, so the inverse is that the SH is going to be moving up. So that's what we have here. It's just kind of an inverted chart, if you will, of the S&P. So that's basically it. Now, I like to draw my lines more on the S&P itself versus we can draw lines on here. It's good practice. It's good practice. I'm not sure if this is going to really help us make any kind of decision. And actually, as I put that line on there, that looks pretty good, right? That looks pretty good. So if we're going to analyze this just based off of this chart right here, what do we think should happen? Anything could happen, right? But what do we think should happen? We've got a touch there, and this could potentially be another bounce down, right? So in this case, I wouldn't want to be bullish on this inverse. It's kind of backwards thinking, right? When you're dealing with inverse, are you bullish on an inverse chart? Well, that just means that you're bearish in long term, right? Or are we going to get bearish on this inverse chart? That just means that you're bullish in the long term, right? With the overall market. So a little bit backwards way of thinking about it, but nonetheless, it's a chart, and there's price action, and there's money that could be made off of it, right? So I suspect here the next one, PSQ, that we're going to see something pretty similar, right? That's going to be the inverse of the QQQ, right? That's going to be the tech sector, so like the NASDAQ, right? You can see that QQQ has moved, or the inverse of it has moved up, so QQQ has moved down. Let's look at that real quick, right? I'm just telling you that it is this way, but let's prove it. You can see QQQ moved up nicely, moved down lately here. Now, potentially up toward the QQQ might be at this uptrending support level and the 50-day EMA as well there, right? So what does that mean for PSQ? Let's see if we can draw a pretty line on this one too. Might have to be from here, somewhere right around there. That's close, okay? That's close. But PSQ also coming up to the 50-day, but now since it's inverse, the 50 days overhead, and we've got the downtrending resistance line, right? If any of that confused you, that is okay. That is okay. You don't have to worry too much about inverse ETFs right now. You can just stick to, what we're used to seeing. It kind of gets my head turned around sometimes too. All right, ADP. Let's take a look at ADP. All right, so this one, no one told ADP that the market had been moving down for the last couple of weeks. It's still really hot. You can see on earnings here, a little gap up, big move up, nice flag down, hit the 10-day and started to move up there. So 10 days been acting as support, pretty hot on ADP. That's nice. Today's candlestick, it's still above the 5-day. If you were to see this thing bounce up off the 5-day, an aggressive person could take that as an entry. They may see, hey, you know what, look, when it was running on the 5-day here, it didn't really give much resting or give much of an opportunity to get in, right? So when things are that hot, we've seen this with Tesla before, where they're so hot that at some point you just need to take an entry. It may not be your beautiful, perfect bounce off of support and a buy point. And if you just want to trade that way, that is perfectly okay, right? But you're going to miss some of these really fast movers, right? And this could be one that's doing that as well. Something to just watch. Could there be some resistance right in there? Resistance, and that wick going right up to that line and then moving down. So could there be resistance there? Is that going to be a problem? I don't know. That's part of managing the trade that you're in, right? You have to understand the risk. You have to know what could happen. Then you have to accept the risk. And if that's the hard part, right, is truly accepting that risk. And then if we do so, we take the trade, then we need to manage that risk. You can understand the risk and accept that, trade may not work out my way, but it's an aggressive entry. I want to catch it just in case it does another, fast move on the 5-day EMA. That's great. And then if it doesn't do that, you need to manage that risk appropriately, right? Manage that trade. So that's ADP right there for you. Pretty hot. MRO, this will be the last one we take a look at today. Marathon Oil. I had heard that energy had gotten pretty hot in the last few weeks. So, and this also confirms it here, right? You can see this longer term. Actually, it wasn't that long term, but there was this downtrending resistance line that I had drawn here, and it's clearly broken that. It's not only broken that, you can see it's also broken the 200 simple moving average. So it's gone above that. Earnings didn't tank anything for MRO, so it's still moving up. Some volatility in there, though. Look at that. That's a big, doji, just big wicks you can see, right? Another big doji today as well. So who knows? Does that mean that this could start flattening out and turning around? It could. It doesn't have to necessarily mean that, but all that to say, MRO definitely being a little more bullish lately, and I'm going to guess that the volatility is, I don't want to look at that right now. Volatility, oh no, I guess the volatility is still showing a little bit lower there. But anyway, there's definitely trades that could be considered with MRO. What if one were to consider a bull put with the short strike below the 20-day? So maybe we do a 25 by 24, right? Now I'm just kind of curious. If we do a 25 by 24, we'll go a little over a month out. What could this look like? So we're doing the September monthly expiration, 25 by 24. I know the liquidity is good. MRO is just good that way. And there you go. There's a potential of $22 return on a $78 risk, right? And to draw it on the chart, because I like to do that. This is what we'd be looking at. So 25 by 24 going out. What was it? September 15th, I think. That's your bull put spread. Have a couple bounces off the 20-day right there, right? This is aggressive. For a credit spread, this is aggressive, yes. But energy, when it gets hot, it can start moving quite a bit too, right? and the nice thing about a credit spread, when you set that up and you manage it in a way, like I like to manage it as I'm going to take 50% of the max profit. I'm going to set a GTC order in there. So when it gets to 50% max profit, I'm just going to get out of the trade, right? When I'm not holding on for max profit, I'm willing to just take, say, half of that. There's times where you might get a couple nice moves up, and 2 days later, you're out of that trade with your profit. All that risk is off the table. You've captured half that profit in a couple days, even though the expiration was just over a month out, right? So that's one of the nice things I like about the credit spread, right? So this could be an aggressive place to place that trade. If you want to get more conservative, a 24 by 23, I mean, let's ask ourselves right here, right? Could the stock move down and breach? Yes, it could. Anything could happen. Should the stock move down and breach that? With what's been happening the last couple months, no, it should not. And I imagine, hope I didn't speak too soon here, but I imagine that even a 24 by 23 is going to have an okay payout. Yeah, not great, right? The more aggressive option was like, okay, that's a serious ROI for a credit spread. This more conservative route right here, making $12, potential $12 on $88 risk. Now you're in that 13-14% ROI range. So it's definitely more conservative. So another nice thing about spreads, right? What fits your personality best? What fits your risk tolerance best, right? So what's going to work better for you? And that's what you'd go with in this situation, right? So a couple different options to consider there on MRO. If you wanted to take a trade there. I'm not saying that it's at a perfect buy point right now, by the way. I'm just laying out some possibilities so you can keep an eye on it. If it were me, hey, I'd love to see this thing come back down and bounce off of something. Maybe it's that 200 simple, although it hasn't really been respecting the 200 simple. Maybe it's the 20 EMA. But you bounce off the 20 EMA, hey, if you can get a good bounce off of what you consider to be support, now you're in business. Now you're in business, right? So just throwing that out there, something to kind of keep an eye on. But there's potential in there. There's potential. All right, guys. It actually works out. I didn't plan this that way, actually, but it works out well that what I want to bring to you next is we are teaching a step 3 course, which actually we go over credit spreads, right? Bull puts, bear calls. Step 3 is all about credit spreads. We are teaching that course in 2 weeks. It'll be August 25th and 26th. I know many of you guys, if you're Top Gun, if you're part of our program, you have access to that class, right? Yeah, even if your Top Gun was, let's say you bought it 12 years ago. If you just haven't been doing much with trading yet, you want to get back into things, you can join that course, right? You can join that course. The education is lifelong. It's available to you for life. So that is August 25th and 26th. If you want more information, you want to sign up for that, events@tradeway.com. There we go, events@tradeway.com. That's going to be your way to get the information that you need and get registered for that event. So that's going to wrap it up for this session of Live Trading Thursday. Thanks for being on. I'm already looking forward to next week, guys. We'll see you then.